everybody. Chris Franks with Texas West Capital coming at y'all live here, 11 a.m. Central Standard Time here on, oh my gosh, it's Halloween, right? Friday, the 31st of October, 2025. And hopefully y'all aren't getting spooked by the markets. Yeah, I said that. Hey, I like to have fun, right? Life is way too short to be so serious all the damn time. It's just money, right? How are y'all doing? Hopefully you're doing well. We're going to talk about a little bit about the options expiry that just happened here with Bitcoin and Ethereum and what that means coming into November. We'll look at the charts. I really don't have a whole lot to talk about today, so we'll see what we can do. So go ahead and hit the thumbs up and the like. Share the stream, guys. I would appreciate that. And then we can kind of get into it here. Still working on being able to get Fibbo in here. He's just had a really tough time on Fridays here the last since the summer, really. He's usually got some kind of meeting or presentation to give at his day job around this time. And so, you know, we end up being about an hour or two earlier than when he can be done. So we're still working on it, guys. We are working on it, all right? I'm going to hopefully have him on here before too much longer. Now that we're kind of getting into the last kind of few months of the year, I think things should calm down with him at work there, and you'll be able to get his thoughts on the market and whatnot. By the way, subscribe to the Market Breakdown. Okay, that's the Monday through Friday newsletter. You can do it at themarketbreakdown.com. We just recently, yesterday, I changed up the format a little bit. We're going to do it this new way for about a week, get some feedback, trying to give you guys more of what you're asking for. And every Friday, Fibbo now, the last few Fridays he's done this, he's going to continue to do this. He's going to have a Fibonacci Friday, I guess, section, I guess you could call it there in the newsletter where he discusses his thoughts and his ideas of markets and whatnot as well. It's a free newsletter. Y'all just go ahead and jump on it, okay? So, other than that, oh, yeah, you see this little thing up here. There we go, that thing. Click on that. I have a webinar coming up. You guys need to get signed up for that Trap and Trend webinar. And basically, it is probably the most effective trading system out there. I mean, I don't say that lightly. It takes into consideration the things that I teach day in and day out at TWC in terms of how and why liquidity flows the way it does, and how to make money off that, basically, right? And that's what this system does. You know, those of you that are watching here, I see Roy is in here. He mentioned the day after I taught it to our, he's in with us at TWC. And the day after I taught it to them, he used it to go 5 and 7. So 5 out of, well, I say 5 and 7, to go 5 of 7. 5 wins, 7 losses. And the losses are managed extremely well with the risk management in there. So you guys get up there, get set up ASAP, because there's limited seats in there. We're going to go live on Tuesday, November 11th. I've got it scheduled for about 2 hours. And so we'll see how that works out for us. But you're also, prior to that, probably today, I'm going to give you access to my risk framework video. And so that teaches you the way that I approach risk management in the markets and how to do it effectively. So whether you're using this system or anything else, the one thing that most traders miss at the beginning is how do you actually use proper risk management. And so that's what that will teach you. And that itself is worth well more than the webinar that's coming up. But you're going to get that in with it there. So lots of good stuff going on there. Okay, guys? But anyway, yeah. So if you're looking, listen, you don't have to have ever traded before in your life. If you're looking for something that's finally going to give you consistent wins, right? Doesn't mean every trade's a win. There's nothing out there that does that. But this has a pretty significantly consistent win rate. We were looking at it in the live trading I do with our students 3 times a week. So we were looking at it the other day while we were in there, and we were trading on the 1 minute time frame, and we had something like at least 8 or 9, maybe 10 on the 1 minute or the up to the 5 minute time frames. Opportunities over a couple of hours that made money using that trap and trend system. And so, you're looking at that with about an average of about 3.5 to 4 points for each one. So you were making 20 to 30 points, and that's pretty damn impressive. With the the futures there. So anyway, you guys, I'm telling you, y'all are out here and you're looking for indicators and you're looking for all this magic stuff. And this is all you really need. Now, you can do beyond it, of course. That's great. But honestly, just utilize this to sell any time frame, any asset, and just consistently turns out to be profitable. So, yeah. And plus, like I said, the proper risk management there, and that's going to save your butt, more than you can actually imagine on there. So get in there and sign up for it pretty quickly. Seats are going quick. There are limited because all these, platforms only have a limited number of seats, Zoom and StreamYard and everything else when you set up these webinar events. Hey, there's Fibbo. Look at him. He said he's stepping in to say hello real quick. We'll be on next week. There you guys go. You heard it from the man himself. He's going to be here next Friday. He told you before he told me. So there you go. Oh, yeah. As Mark's pointing out here, what I taught there goes for longs and shorts. Yeah. So, and it works. And here's the best part about it, guys. You struggle a lot of times with the things everybody else is teaching because they only work like in a trending environment, right? And that's the way most systems work. This system actually works not just trending, whether it's trending up or down, but also works when you're going sideways. It actually it's a system that works when you're going sideways, which is absolutely incredible. Scott, where do you sign up at? You can just click this link up here, or you can go, if you follow me on X, you can go to my profile. It's tagged there at the top. Or if you can't do any of that, you can go to members.texaswestcapital.com, and it'll be one of the options down at the bottom on that page there. Okay. So, yeah, Mr. B, no reason to be shitting your pants, my man. We are just going sideways, and we'll talk about that in a minute here. For the fact that price has done nothing but go sideways and everybody's freaking out, that tells you a lot more about the emotion that people are experiencing, right? Rather than actually what's going on with the market. Okay. So, but that's part of being human. And that's the one thing you have to overcome, right? And we work on that day in and day out over at TWC because it's such an important part, right? We tend to focus a lot on these areas that nobody else can or really doesn't focus on, which are the most important. Your psychology, the emotional side of it, understanding how the market participants are looking at the markets and how they're going to react and what that means for you and how do you protect yourself from reacting that same way. And a lot of that just comes, honestly, it just comes from knowledge, guys. You get fearful in the market. You get emotional when you don't understand what's going on. And, if you're going to write me now and say, hey, because you're offended because I said that, go be offended somewhere else. I'm not attacking anybody. I'm telling you the reality. And if you take that as an attack for some reason, that says a lot more about you and your present state of mind than it does about what I'm saying here, okay? You guys have to understand most of your issues, I'm going to be honest with you. Nobody's going to tell you this. Everybody's going to tell you your issues are because you don't know this or you don't know that. No, most of your issues in trading come from just emotions, the psychological side of it. That's why Fibbo and we trade based on that psychology, right? On that emotion. Because we understand we've been doing that between the both of us over 50 years. I mean, it's a long time, guys. You don't stay in the market 5 years, 10 years, whatever, if you haven't figured it out, if you haven't figured out how to be consistently profitable. But I get the most flack from people that don't want to hear the things I talk about when it comes to emotions and psychology. And those are the things that are most important. So just some ideas there on that. What's up, Colton? Colton says, let's go. Join TWC if you want to improve your trades and either make profit more consistently and or lose less money at the very least. That's what it's all about. Hey, listen, what he said is really important there, guys. Do you realize that the biggest effect on your capital account are your losses? It is. It's not your wins. Y'all are sitting here focusing on winning and trying to win more, whatever, and you're not focusing on how to reduce your losses. But yet the biggest effect that you're going to feel on your account is by your losses. The less times you lose and the less money you lose when you lose means a lot more to your capital account than getting a little bit more in profit. Everybody's focused on the win rate, and they should be focused on the risk-adjusted return. They should be focused on their proper risk management, because that's what saves you. Your wins don't save you. Does that make sense? No, price cannot go down to 74K and be sideways. That's still down. We'll pull up the chart here in just a minute, Mr. B. And we'll discuss what the sideways is. So you can see that, right? But that wouldn't be considered sideways. No, that would be a drop. It's a 25% drop from where we're at. And that isn't the bottom of the range, right? The bottom of the range sits much higher than we are here. So anyway, yeah. So jump on that, guys. If you want to learn something that's actually going to help you out and get you much more consistently profitable than what you've been, even if you want to learn more, especially if you want to learn more, right? And you want to dig in deeper than trading, you can use the trap and trend system that I'm teaching to at least get you to where you're actually making profits. And that's the whole goal, right? Because when you're making profits, you feel better about things. Emotionally, you feel better. Psychologically, you feel better. And that means you become more focused on, hopefully, learning more about trading and more about especially the in-depth things we discuss over at TWC to give you an understanding of how and why things are happening, how to figure them out, how to approach the market, how to approach trading, right? By the way, I just noticed here that the futures for the S&P dropped off here about, what is that? Almost 40 points. I had two short-term longs in there this morning, locked in, looks like 497.70, so just about $500 right before that happened. And as a matter of fact, I was in a trade and I saw it kind of stalling out there, decided to get out of it right before that drop happened. So, hey, look at that. We're doing good there. Let me see here. So options expiry happened today, right? I know some people are confused. They think it still has to happen. No, it's already happened. The biggest options expiry is Deribit, and that happens at around 3 a.m. Eastern. So that already happened this morning. What is that, 8 hours ago? It's after 11 now? Yeah, about 8 hours ago. And so we had the Bitcoin and the Ethereum options expire there. I believe the CME institutional options expire at 11 a.m. Eastern. So they would have expired here about an hour ago. And then I think the BTC has those weekly things it does. And those options, I believe, expire later today, maybe about 4 p.m. Eastern, right around there. But the biggest ones, the ones you really need to pay attention to, are the Deribit options. And those are already gone and done with. Now, options, I've been talking last few days here, especially about Bitcoin. And the fact I was like, listen, we had the max pain point right there around that 114, 115 or so. Okay. And then we had the band, right? The gamma band from the dealers, which was sitting like right around 100,000. And then at the upper end, right around 120, 114, 120, right up in there. And so the idea was that, dealers are trying to stay delta neutral, right? And so this band gives you a nice pinning of price. And what that means is if price were to suddenly break out above that 115, 120 area, like with some strength, then the dealers would have to then start buying, right? They'd have to start buying spot to keep their, again, they're trying to keep their books, delta neutral. If it came through 100,000, that would mean we would likely see excessive selling by them. And so in either way, what you're talking about is exasperated price movement. We're talking about price movement that really gets in, right? If you broke out strongly through that upper level, then that gives you what we call a gamma squeeze, because like I said, then the dealers have to come in and they have to start buying, right? Buying. And that just kind of helps, feedback loop, right? Makes price go higher. Then you all are buying, and then it's making price go higher, and then they have to buy more. And that's how you get a gamma squeeze. All right. So these are what's going on there, right? So max pain for Bitcoin was around 114. Max pain for Ethereum was around 4,050, 4,100, right around there, according to the options. And so we got that down. Now, the thing is, we didn't get a real snapback when the options expired. And what that means is that your dealers were probably pretty well. They're like prior to the expiry, they were kind of getting out of some positions and whatnot. Because what usually happens is you'll have a snapback that'll happen with price when expiries close if your dealers are pretty strong one way or the other. But if they're already exiting positions coming into that expiry quite a bit there, then you don't get this snapback. And the problem with that is what you need to see now if you're talking about options is for Bitcoin, you want to see a quick move, reclaim that 114, 115,000 area and hold above that. For Ethereum, you want to see it getting above that 4,100 area and holding above it. If it can't do that pretty quickly here within the next day or so, then what it usually can mean is that you're going to have some drift lower, right? And so Bitcoin, that means you're drifting down to, I will look at the chart here in just a minute. I think with Ethereum it was like 3,600, maybe 3,750 is the next kind of shelf area. So this is kind of what you want to watch here if you're into all that, or just trade the charts, right? So let's jump over here, look at the charts. There we go. This is Bitcoin. And let me zoom in a little bit here. And so effectively, I mean, this is all it is, right? So here's the sideways. I had that question, Mr. B. Here's the range here, right here. So we're kind of holding support at that range there. So if you were dropped down to say 74,000, that's all the way down here. This is not a range, right? This is the range up here. So yeah, so if we were to lose that 100,000, there's a good chance we could see a move down. I would look at least to this kind of 98,000 area first. But once you start dropping through that, you may be looking down here closer to 87,000 or even, maybe 84,000 here. Now, right now, I don't think that's what's going to happen. So far, we're holding. There's no, nothing's happened here that says, oh my God, we need to be freaking out. And oh my God, price is going to die off and all these things. There's nothing happening here. We're finding support at range support like we should, right? So we're sitting where we need, at least need to be sitting. Now, last night, for our members, our subscribers, our students over there at TWC at the Trading Academy, I discussed with them, we were sitting at the BMA evening video update, and we were kind of pulled back here. And I said, well, listen, we got the support here. We're looking good. If we're breaking out above this 109,480 area here, it was a little bit different. It was a different chart, but is that area right there? I said, then we were looking for a move up here to about, 110,000, 111,000 up here toward that daily R1 pivot. And lo and behold, that's what we got. So, again, if you were paying attention to that, you decided to take that long, again, stop loss just below the swing low here. You got this move up. You had that rally up into that target area, which worked out really, really good. If we're looking at the 1 hour, you can see here that the weekly S1 pivot's sitting a little bit lower here. So we've got a lot of overlapping price action here. Wouldn't be surprised to see this pull back toward this 108,900. If we can see a pullback toward that and a rally off that, things start looking really good then. At that point, let me see here. If we just kind of look at this swing high down to that point, we'd probably, there's a good chance we're going to be looking for 5 waves up here to 118,208. The next move up. And so that, of course, takes us then higher than the previous swing high here, right? So, that starts looking pretty good, and that starts setting the move up for the breakout to a new all-time high. That clears us above this 114 level. This 114 that I was talking about. So that's kind of what we want to see there, right? That we want to see that a little bit of a pullback, gain some more momentum, some strength, and then take that momentum and fly higher from here. So we'll see what happens. We're not saying these things are going to happen. These things have to happen. We're saying if we can get this pullback here toward this level, I want to see if we can get a reversal around that 108.9 right here at the low volume node at the S1 pivot, at the weekly S1 pivot here. Let's see if we can get that. And so You can see that we're starting to reset here, almost neutral on the stochastic RSI. RSI remains bullish above neutral for right now. But that's what I want to see if we can get. If we drop on below that, I would be looking down here around 108 would be my next target area. 107.5, 108 right here. We jump to the 4-hour. Here's our 4-hour. We had a nice bullish engulfing candle here on the 4-hour. We also, right here, had, again, something else I talked to our students about was we had this these lower lows in the oscillator here. And we had higher lows in price, which is hidden bullish divergence. And then we had a bullish engulfing candle. And we did all that at support, which is the bottom of the range here, of the large range. So there's a lot of great setup on that. And this looks really good, but we want to see the continuation and the breakout higher here locally. We want to see it, rally up above that 114, 115 area and overall hold. That doesn't mean we can't break out and pull back and break out again and pull back and break out, but we want to see that kind of area hold this support. And if we can get that, you should be much, much more bullish than what you probably are. Okay. So that's what I'm kind of looking at with Bitcoin there. So yeah, Mr. B, in relation to your question, in answer to your question there, no, 74,000 would not be sideways. We have one local range here we're kind of inside this much larger range right here. So dropping down to 74,000, definitely drops us out of those ranges there. We're not going to have like a $74,000 to $128,000 range. That's pretty big, right? That's like what is that, 80% from the bottom of the range to the top of the range, something like that. So yeah, again, I wouldn't really worry about the downside unless we're getting a nice, quick, strong breakdown through 100K, in which case then I'd look at the targets I mentioned. But until then, guys, we're sideways here inside this larger sideways here. And I mean, honestly, we've been going sideways since this drop here on October 10th. We went up and came down, went back up a little bit higher, pulling back down, higher low. So, I mean, off this. So here's how market structure works, guys, okay? This up here is your swing high, right? And you come down, you look for a swing low, and then you get a swing high, and that only becomes a lower high once you break down below the lower low, right? So you get like this. We can actually just put this on the daily, make it a little bit easier. So you would say the market structure off the all-time high here is bearish, right? Is bearish down into the low. It's a low. So it's a high, a low, a lower high, a lower low, a lower high, lower low. But guess what? We broke out above that lower high. We broke that bearish market structure. Now, that does not mean we can't continue with a larger bearish market structure down, and you would just have a high, a low, a lower high, and then a lower low. But that is not confirmed until we actually break down. Right now, what we have is this market structure right here. And then we have this where we broke out above that last lower high. So this bearish market structure is broken. So now we have bullish market structure coming off the swing low here, right? So we have a low, we have a high. We pulled back and broke out again. That left us a lower high or a higher low and now a higher high. And then we pulled back here. And this, swiping this low here, may actually give us a slightly lower low here. So the one thing you want to look for when you're looking for changes of direction in markets, with the breaking of market structure, is you look for that initial break, you look for a pullback, and then you look to break above that swing high that made that initial break. So you break out here and you say, okay, I did break this bearish market structure. We might have bullish market structure heading up because you broke here. You pull back and you're looking for a breakout higher. So if you can break out above that breakout, that gives extra confirmation to the breaking of this bearish market structure here and really suggests that you've got bullish market structure heading up now. That's the proper way to look at structure. Okay. Let me see here. What are we looking at here? What am I missing by labeling the latest rallies to 115, 116K as a last point of supply or a last point of supply? Well, you would have to be in distribution, but is that what the volume tells you on the structure here? Is this volume right here telling you that this is a last point of supply? That's that's what it is. It's not simply, oh, it's going sideways and I think it's distribution, so that's the last point of supply, right? You have to, what you need to do with Wyckoff is you're analyzing your volume and price action at specific areas within the range, which are going to tell you more likely than not what's going on. But none of it ever tells you definitively this is that or that, right? It's not like you're trying to tell the chart, well, this is what I think you're saying, so this is what's definitely going on. You're seeing, you're reading the what's going on, right? So if I'm looking at this, I sit there, I go, okay, well, to me, this looks like your preliminary supply up here. There's your pullback. There's your buying climax, your automatic reaction, potentially selling climax, automatic rally, secondary test. There's your bump up in phase B. There's your spring, very heavy spring, a lot more volume than what you had at what would potentially be your selling climax. So you're going to get a test. There's your bump up, your show of strength into your test. Now on your test, you have, it's marginally lower. Again, a nice large wick on that, below that. You've got significantly less volume than what you have on what looks to be your spring here. So you're looking for a quick move back up through this swing high, which we got. And now we got our pullback. So to me, this is looking a lot more constructive as reaccumulation than distribution here. On the move down from here, you don't have, your volume is not like, as you're moving down through here, your volume isn't really expanding, right? From the swing high up here. Your volume actually dropped off until this one candle, which gave it this, this large spike of volume. There wasn't like a expansion of volume, which is what you're looking for, because expansions of volume tell you you're having, market participation, right? Price goes lower, more and more people are joining in. They want to see it go down lower, right? Instead, you got your volume up here, and then it dropped off as it was coming down, and then you had one big push, and then boom, popped up, right? Popped down here. It had a chance here to continue it down lower, and what did it do? Much less volume than what you had, and then rallied up and broke back out above your rebound here. So to me, that suggests much more likely constructive accumulation or reaccumulation in this range versus distribution. Okay. Yeah. Like Bamboo says here, as Wyckoff teaches about nuance, when a structure has the appearance of completion, but the composite man has not fully absorbed supply, it's all about effort versus result of the structure. Yeah. So you guys want to be careful. There's a lot of, especially bigger accounts out there that are, God, I've seen it the last few weeks. And I know it's got to drive, it drives me nuts. I know it's got to drive Bamboo nuts about it too. But they all just like posting the same range, right? And then some of them have accumulation schematics on there. Others have distribution schematics. Nobody has volume. And you guys have to understand, if you're going to do proper Wyckoff analysis, it's price action plus volume analysis, kind of like what I was just showing you there real quick. You have to understand what you're looking for in the range and where you need to apply that volume and price action analysis. If you're just looking at a picture, guess what, guys? Those schematics that they throw up there, the only reason those schematics exist are to teach new Wyckofians or practicing Wyckofians what the various levels are, or the labels are, and what the phases are and what's going on in there. They're not meant to say this is exactly what it should look like, because, and Bamboo will tell you guys the same thing. When you're looking at it, right, your distribution and your reaccumulation can look pretty much exactly the same. The only difference is, where's the volume? What's it doing at those specific points we look at when we're analyzing it? Other than that, they can look pretty much exactly the same. And so if you see somebody out there just throwing out just the schematic and saying, reaccumulation, accumulation, distribution, redistribution, and then they're not actually actively discussing volume and price action within that, then you know that they don't know what they're doing when it comes to Wyckoff. They may know something else, but they don't know what they're doing when it comes to Wyckoff. And that can be dangerous to you if you don't know Wyckoff, because it's going to sound convincing, right? This is the biggest issue that new traders have, especially with social media. Okay, is that you get in there and somebody's got a big account, and if it's a subject matter that you don't know anything about, it's easy to make it sound like whatever you want to make it sound like, because you don't know, right? You use certain words, emotional usually, in there and whatnot, right? They kind of feeding on what you want to hear, or specifically maybe not what you don't want to hear, right? To get your reaction. And that's probably the biggest issue for new traders in this world of social media right now. I started in 1995, 1994, right around there. I can't even imagine having to start trying to trade today, because the same nonsense that I saw when I first came into the market back then is still today. It's still the free stuff you're seeing out there, guys. Right? If all your big accounts are basically regurgitating the same, and we'll say it, price action patterns, you got to understand. Here's the thing. Most traders, most retail market participants are out within 3 months, well over 90%, having lost everything they brought into the market, okay? And yet you and pretty much every other retail market participant out there are doing the same thing, right? You're analyzing the same way, head and shoulders, cup and handle patterns, all these things, right? But stop and think for a moment. If you're doing the same thing everybody else is doing, and 90+% of them end up out of the market pretty quickly, you need to do something different, right? You need to get more understanding. You can't just blindly keep doing the same thing everybody else is doing. Which, again, part of that is proper risk management. That's why I'm giving it away free with this webinar, so that you guys, no matter what you do, you're always going to know what proper risk management is and how to approach it and why it's important, which will hopefully have you using it every time you're trading. The goal in trading is to stay in long enough to make consistent profits. It's not to catch the absolute lowest price and long it and then sell at the absolute highest price. If you're trying to do that, you're going to lose day in and day out. Okay? Your goal as a trader, your job as a trader, 1, use proper risk management. And 2 is to consistently lock in profits. Again, that doesn't mean you're going to make money every single trade you make, but you should be making more more profit than losses, right? And that can come with, you don't even need a 50% strike rate. You can make less than 50% correct calls and still be significantly profitable. Again, it's all about proper risk management. What is your risk-adjusted return, right? What is your profit factor? Okay? But the holy grail of trading is to get a win rate of anything over 50%. So 50.1% win rate. And your greatest or your average win is greater than your average loss. That's the holy grail of trading. It's not having a 90% win rate. It's not this, it's not that. That is what it is. Now, you don't have anybody else out there telling you this stuff, guys. Because 1, most of them, as Bamboo so eloquently put it out here, are LARPers, right? They don't really know what they're doing. But they're good at marketing. They're good at getting loud voices. They're good at getting you to follow them, right? But they don't know much else beyond, which is what the everyday retail market participant does. And again, if you're doing what everyday market participant does, retail trader, right? You're going to get most likely what most of them get. The odds that you're special enough that you're not going to do that are very low. And this is where you get offended. And this is where you send me the hate mail. Do what you need to do. But this is the reality, right? You have too much damn ego, too much pride, and that's keeping you from being successful as a trader. What did I just say? You have too much ego, too much pride. Oh no, I'll definitely figure it out on my own. Well, maybe you will. But even if you do, that's going to take time. And that's going to cost you money. It's going to cost you opportunity, right? So you have to consider when you do, you have to think of trading like a business. If you were to start a business and get into business, what would you do to be able to get profitable as quickly as possible and maintain those profits and become as knowledgeable as possible in the whole, not just what you're doing, but the business side of it, right? What would you do? People get into trading and they don't think that way. They just think, oh, well, I'm just going to follow all the free information out there. I'm going to do it. But here's the thing. Even when you follow somebody like me or Bamboo, follow Bamboo. Bamboo, throw in your X handle on there so I can let them know about that. But even if you're following the information we give you, the problem is most of you, the newer you are to trading, right? You're not going to know what to effectively do with that, right? That's the big thing. If I say, man, listen, I'm thinking about longing here to this target, well, that doesn't tell you anything. Here's his at there on X if you guys want to follow him. And I would suggest you do. Puts a lot of great information out there. He's a little tougher on people than I am. but yeah, Bamboo's a great guy. Bamboo, the reason why I say is Bamboo, I know him personally. He's been with us at TWC for years. And so I know who he is and I know what he's doing. So that's why I say, hey, listen, follow him, right? But here's the thing, guys. You have to get out of your own silliness. You are your own worst enemy when it comes to trading. It's not that Wall Street is manipulating you. It's not that crypto whales are stealing your money. It's not that, oh my God, the market's all manipulated. It doesn't matter. Here's the best part about that. If you understand the market, the way I teach it at least, right? It doesn't matter if it's manipulated because price still functionally moves as it's expected to. That's the thing, right? Because even if it's manipulated, you still can't manipulate an entire whole market, making them do something that they wouldn't normally do. You see what I'm saying? The manipulation has to come at those areas where you're going anyway. So it doesn't matter. I get so sick of seeing everybody out there complaining, oh, everything's manipulated. Sorry, I didn't mean to do that. I get so frustrated with it because it doesn't matter. Even if it is, the market still works. And how do I know? Because I still trade it every day, guys. Equities, Forex, futures, crypto. Hell, I trade futures live 3 times a week with our students. So it doesn't matter. All that matters is, do you understand how things work? And with that in mind, do you approach the market and the specific trade you're in the correct way? Most don't. That's why they lose money. And then they blame on everything else other than themselves. And at the end of the day, you absolutely 100% have control over this. Over how you do in the markets. It's not anybody else's fault if you're not doing well on there, okay? See, this is what I love, man. See, look, this is what I love right here. He says, only because I followed your advice was I able to grow constantly and why I don't stop growing. Thirsty for knowledge all the way. I love when our students like Bamboo and others do extremely well. And I hope to God they all do better than I ever did. Because them doing better doesn't make me a worse trader. It doesn't affect me, right? But I can look in there and I can say, listen, I had a positive impact on somebody's life. That's, for me, that's why I do this, right? Yeah, it's a business. It is what it is. But at the end of the day, it's more than just a dollar. It's, can I have a positive impact on somebody's life? Can I get them to open up maybe some thoughts and some ways of living that they didn't think were possible because they were stuck in the way that society tends to make us think, right? I grew up that same way. Listen, guys, I'm Gen X. My parents are boomers. when I was raised, all I ever heard was you need to save money, you need to get a college degree, you need to get in with the company and stay there, until your pension and whatever. And of course, we all know the silly stuff today, right? So I didn't get where I am today by blindly following the advice. I had to change the way that I was thinking, right? And so if there's any way I can help you all do that, whether it's just here on Beards and Bitcoin on Wednesday, or the market breakdown here on Friday, or my post on X or whatever social media, or if you decide to join us because you really want to learn, right? You've had enough of being treated like secondhand garbage out there by the market, right? And you're serious about actually learning. So wherever it is through there, if I can help you just a little bit, see things a little bit more where you actually have control, where you don't believe that the world controls and you're just along for the ride, man, that's awesome. Because the feeling you get from that, when you realize that you aren't actually being controlled by the world, that you have control over your future and things that are going on, it is a liberating thing, guys. Absolutely 100% liberating. It's so different. But most will never get that. Most people are stuck in the woe is me, I'm a victim, it's always everybody else's fault, rather than just figuring out, no, it's your fault, generally speaking, right? Even if somebody wrongs you, you have and this is where most people hate when I talk about this, but even if somebody wrongs you, you have some part in that. The decisions that you made in your life led you to that point. The decisions you made when you started interacting with that person led you to that point where you could be wronged by them. Doesn't mean you're an idiot, or you're stupid, or you're dumb, or any of the other silly stuff. It just means, listen, this is the reality. And if it is, guess what? If I recognize the things that I did wrong, the things that I can do better, now I can change it in the future. I don't have to repeat the same thing over and over again. And that's where people get caught. And I say this because this is all in life, in all areas of life. Jobs, business, friendships, relationships, anything, skill sets that you're learning, which means it also applies to trading. If you can look back at your trade and you go, yeah, I got emotional right here. This was my target and I didn't pull my stop loss, or I didn't take profit there, even though I had planned to at the beginning, because I got greedy, I got emotional, and then it popped up a little bit higher and I got more emotional, and then all of a sudden it dropped on me and knocked me out. That is not anybody's manipulation fault, nothing. That is yours. You didn't take profit where you said you were going to. And heaven, Lord have mercy, hopefully you had a stop loss, or at least you had that, right? But if you didn't have that, guess what? That's also your fault. You didn't have a stop loss. It's not somebody else's fault for manipulating the market or doing something like that. Does that make sense? Fibbo says he's dressing up as a manipulated market for Halloween. Fibbo said, even the best, what'd you say here, bud? Even the best MLB hitters fail 7 out of 10 times. In trading, that's called a Tuesday. The key isn't perfection. It's plate discipline and risk control. That's exactly what it is. Okay? That's exactly what it is. But this is something that if you're lucky enough, you're going to learn before you're out of the market. And what do I mean by lucky enough? I mean, you're actively trying to learn these things. You're not actively saying the market's manipulated, somebody's stealing my money, it's everybody else's fault. That doesn't get you anywhere. You cannot change or get any better with what you're doing if you're not changing your mindset there, if you're not understanding where your contributions come in to the issues, that the results that you have, right? Let me see here. Can you please take a look at the Bitcoin chart on the weekly and monthly? Yeah. By the way, these red marks are exactly that. That's what those red lines are for there. Jumping out here to the weekly. Look at that. Look at how pretty that is. We are right here in this range, right? Between the previous swing high there and the swing low, it becomes the swing low here. It's the support. Look at how great we are still here. Now we're going to have a close date. What I'm interested in seeing is can Bitcoin catch a bid and close green for October? I don't know if it will, but here on the all-time index chart, it would have to close above 109, basically 109,560. Oh, wait, no, I'm sorry. 112,363.56. We're at 109.5. We're not even $3,000 away from that. Bitcoin can absolutely catch a bid and potentially close bullish on that. Now, whether they will or not, I don't know. Do they need to? No, they don't even need to. Why? Because right now, as long as they're sticking above this red line here, why are you going to be bearish? It continues to hold this support. Wick. There's demand here. It keeps showing up. You have this higher volume ledge here. Higher volume node ledge right here. Holding that support right there. If we jump out to the monthly, again, same idea. Look at this monthly. Look how beautiful that is. Everything closing still above that level. Now you have a doji potentially printing here. On the monthly, you'd have to get above 114,042.93 on this chart to be green for the month, or in my chart, white, right? All you've done, come in sideways between the pivot and the R1, drop to the pivot, support, rally back up into the R1, resistance, pull back to the previous resistance as support. You know, there's nothing going on here that says this has to come down. Matter of fact, until it actually comes down, you should be neutral or bullish. Why? Because it continues to hold support here. 3 months now. Well, 1, 2, 3, the 4th month now. Here. Hell, you can even go back to this candle right here. 5 months. It's been holding above this kind of 102 area here. By the way, on the weekly, every single time on this this cycle here, right? Every time it's pulled back toward the lows, it's been right here around this 44, 45 area on the weekly RSI. Did it right here. Did it right here. Did it right here. You see it? Boom, boom, boom. And now we're up here and we're right around that area still. So, you know, again, I saw somebody say, oh, yeah, we need this drop down because that'll reset the weekly RSI and then we can go up. Well, this is November of 22, guys. This is 3 years ago. For 3 years, it has never pulled back below that 44 area. Why would it all of a sudden need to pull back below and down here below, 30 to get to oversold so that it can go up higher? Doesn't make any sense at all, does it? Okay. So these are the things that matter. Does that mean it's going to hold down? No. Does anything of what I say mean it can't go down? No. But right now, nothing has happened on the weekly or the monthly that should make you think it absolutely has to go down. As a matter of fact, for weeks now, we've been sideways locally. For months, as I showed you, we've been sideways. With support at the same area, demand continuing to show up. Okay? Bamboo says on the 2-week, we're still good. The order block is still doing its thing. Would have to break below 98K for the order block to be invalidated. Yeah. That kind of aligns with what I say, guys. If we break down 100,000, then 98,000 would be that first technical area we watch, right? If we drop through that, then maybe we're getting 87 or 84. Man, and heaven forbid we actually get something like that. Can you imagine the stench from people? Everybody convinced the top is in, and then that thing turns around and goes back out and breaks to a new all-time high. I'm not saying that's going to happen, but I'm saying, can you imagine just the psychological destruction, the emotional damage that would do to most retail market participants if it got something like that? It's crazy, right? So, let me see here. So this is kind of what we've got at the moment here, at least on Bitcoin, okay? Now let's jump over here real quick to Ethereum. So here's my look at Ethereum. So kind of like Bitcoin, it seems to me like that low may be in right here. I mean, my God, folks. You got this drop here. Look at this. You got this drop just shy of the all-time high, right? Hell, you can even go from the all-time high, but let's just go from here. Your volume dropped off the entire way down. There's no increased participation. You're not seeing something like this where you're getting expansion of volume or like this here, right? This tells us with this going up and this expansion of volume, that's an actual trend. It tells us, getting those larger candle spreads, we're getting the volume expansion. That tells us that market participants are increasingly going long as price goes higher. Here, price is going lower, but your volume's dropping off. What does that tell you? Well, it tells you, sure, price is going lower, but it's not because more and more participants are getting in. And then you get this capitulation type volume here. Look at where this ends. This support, this resistance over here. So if I'm looking at this, I'm saying this looks like a WXY here, what we call a double zigzag correction in Elliott wave. Here looks like 1, 2, 3, 4, and 5. And then you get an A, B, 1, 2, 3, 4, 5. C, so you get an A, B, C. And then you get an A, B, C, or a WXY. 3 waves up, retraces at least 90% of wave A here. And then you're coming down here with like a 1, 2, 3, 4, 5, back down around wave A. This looks like a classic flat correction here, wave 2. Then you have a hammer candle down at the swing low here, again, finding support, same place everything else is finding support here, right? You've got that on volume. Well, the previous one right here was volume. And then it drops off to half that volume as you make this rally back up. So if I'm looking at this right now, it looks to me like we've got a 1 and a 2 as a flat. So I want to see a breakout above the wave B here at 42, 52, 57. That's Ethereum USD on Kraken. Whatever that is on your particular chart, I want to see that breakout above that. If we can get that, that should confirm that wave 1 is there and wave 2 is a flat. And then that gives us a minimum expected wave 3 at around 5,100, wave 5 at around 5,432. And what does that give us? That gives us a breakout above the all-time high. That'll give us a pullback to this previous resistance as support before we take off again, if that were to play out. But nothing going on here suggests that we have to go lower. Could we? Sure, we could. But if I'm reading this, it looks like 1, 2, 3, 4, and 5 waves. And the only way you're getting that 5 waves up off this low here would be as a wave 1, which is the beginning of a move. I mean, I guess you could be like an A, and then a B as a flat, and then a C, in which case you would look for a rejection around 45.57 to 47.64. If we popped up there and got rejected and we came, okay, then you can say A, B, C rather than 1, 2. But if we continue through that up here toward that 5,100 area, then you're looking at 1, 2, 3. New all-time high, and again, sets up further movement up overall. So I'm not overly concerned. We're really just sideways. But here's the thing about, again, most retail market participants, right? They don't know what's going on. They don't have, and I'm going to tell you what, experience, even more than education, experience is the real guide, right? You have to have gone through something multiple times to get a real understanding for it. And so most retail market participants don't have that, right? They're new. They're coming in. They're getting excited. They're coming in. So you're going sideways, and first of all, you're fearful of losing money because you're not using proper risk management. So you're scared that if it goes against you, you're going to lose money, which makes you then really anxious and fearful because, oh my God, what if it goes down lower, right? Most of that you can just completely remove just by using proper risk management. Like I said, if you're joining us at the Trap and Trend webinar here in Tuesdays from now, by the way, I think I'm going to actually raise the price on that after this weekend. So, if you're getting in now, you're going to get it at a lower price. Uh, just to kind of see who's serious out there. You don't want to do it. That's fine. That's on you. But if you're looking for something that's actually going to help you for once, even if you've never traded before in your life, while you're learning more, I mean, that's what you do. Or you can just learn that and be good with that, and you will be perfectly fine. As long as you adhere to the rules of the system and the proper risk management that you'll get access to in there to learn. Because that's what it should be to trade, right? But if you want to learn more and you want to learn why is liquidity forming like it does, why is it forming where it does, where might it form afterward, most likely, that's a lot more of what we teach, as well as other trading systems and styles and things in there, at TWC, beyond that Trap and Trend webinar. But as far as Bitcoin and Ethereum go, guys, we are just sideways. But it's that sideways that's going to drive most of y'all nuts, because again, you're unknowledgeable right now and unexperienced really in the markets, right? And so that fear comes from the unknown. I talk about this a lot. The fear that you feel, especially when price is just moving sideways, is the fear of the unknown, which usually means the first thing is your position size is way too large, because that scares you. It scares you, and it should scare you, right? If you have an oversized or over leveraged position, you should absolutely be fearful if price is not going in the direction that you want it to go in. Absolutely, because you've got too much on the line. You're risking too much. Your risk reward is skewed in the wrong direction. Your risk adjusted return is not going to be worth it. Not with all that additional risk you're taking on. But these are all things you have to learn, right? But once you learn them, that starts the fear that you feel, especially when price is going sideways, it starts to drift off. You're like, okay, listen, we're going sideways. So it's either going to do, at the end of the day, it's either going to break out or it's going to break down, right? But you're not fearful if it does one or the other, even if it's in the other direction of your trade, because you're using proper risk management. And that loss is going to be very, very minimal. And that opens up a whole bit of sleeping nights of sleeping, not waking up. How many of you guys, be honest with me, how many of y'all have woken up in the middle of the night and checked your phone with your trading because you're in a position and you were fearful, and you just woke up in the middle of the night, maybe more than once, and maybe you woke up to check your price, and then you kind of sat there and watched it for a half hour or an hour because you were scared it was going to break down or go the opposite direction of what you were hoping for, and you were going to lose money. How many of y'all have had that happen? I did. I've done that before. Before it was as easily accessible as it is today, right? This is, guys, listen, the one thing you have to understand is that these things that you go through as new traders, and they're the same thing absolutely everybody else does. That's it. You're not special. You're not worse. You're not better. You're just doing what everybody else does. Everybody goes through this. The question is, do you learn from it? Do you listen to, for instance, what I'm telling you so that you can learn from it and you can do things differently so you can get better? Or do you allow it to define you, to determine what you're going to do? The great part about that, about not being special in that way, I always say it and then I chuckle a bit because people tend to get offended when I say they're not special, right? Not. I wasn't special. I was doing the same thing when I first started. Same thing everybody else does today. 31 years later, guys, the same thing y'all do today, I did. In equities, because that's where it started. There was no crypto back then, right? So it's not a bad thing not to be special in that way. It's a great thing, because what it means is you're not this awful person, this awful trader, whatever. You're just the same misinformed trader when you come in. Which means what? It means now that you understand, right, you can change it. That's the whole key. That's the whole thing about life and about trading. Understand what you can change. Focus on what you can change. Don't worry about what you can't. Does that make sense? These kind of realizations and understandings are what take you to the actual next level of trading, the one where you have a chance at starting to become successful. If you can't get beyond what I'm saying right now, if you still allow that to continue to hold you back, you don't have a chance. I'm not here to coddle you. I'm not here to tell you what you want to hear. I'm here to tell you the truth. I've been doing that for what, 8 years, 7, 8 years now. Used to be twice a day. Now it's, weekly, but I'm still doing the same thing. I'm still telling you the same thing. I'm not here to blow smoke up your rear, and everybody else is going to do that. And if you think that's what you need, more power to you, go do it. But when you're ready to be serious about trading, when you're ready to really learn trading and to really become a trader, we'll be here. We'll be waiting for you. We'd love to welcome you in. We're not going to give you a hard time. We're not going to make you feel less than. Everybody's got to go through it. Most people just never finish going through it. They allow it to be what stops them. They allow it to be everybody else's fault for why they feel that they can't trade successfully. You see this nonsense going around where people say, oh, well, not everybody can trade. No, everybody absolutely can. Most are not going to do the things they have to do so that they can. That's the key. That's the kicker. But everybody absolutely can trade, I believe. Now, if there's some kind of chemical imbalance in your brain, maybe you can't. Maybe until that gets figured out, you can't, right? Because that's going to affect the way in which you process information. But if you don't have that, the only thing keeping you from being a successful, consistently profitable trader is you. Are you doing the things that you need to do to get where you need to go? Or are you still a victim? Is the world always against you? Do you not have control? If that's what you believe, then that's the way life's going to play out. And it's going to make you think that. You have to hear this, guys. Okay? Bamboo says, lack of control and emotions don't go well with trading. Having had enough chart time and trusting in your ability is what makes it easy to handle your emotions and risk management. But this stuff doesn't sound as sexy as I bought a Lambo after a week. Yeah, exactly, right? But guess what? If you respect those rules, you'll be able to buy a Lambo one day if that's what you need to be happy. I still don't own a Lambo today. I don't. I've had sports cars, and I've enjoyed them. But when I could afford them, when they made sense, but I didn't need them to define me. Matter of fact, I much more enjoy my trucks, believe it or not. I love a good dually. If you guys don't know what it is, look it up. It's a big truck, crew cab, 4 doors, dual wheels on each side and the rear. They're made for work. They're made for, hauling trailers and stuff. But that's just me. That's, I'm that person. I still like some nice sports cars. And like I said, I've owned some in my time, but what I really enjoy is that's where I'm most at home. I'm not trying to be somebody different than I was growing up, right? I didn't grow up with money. Not at all. I told you I grew up with the, basic blue collar parents. My dad was career military guy. My mom was from Germany. So, she was an immigrant. And so again, I grew up being told, listen, you have to save money. You have to get a college degree. God, I got so many of them now. You have to get a good job with a company and stay there and give them loyalty for 40 years so that you can retire with a pension and all that kind of stuff. And, I had to relearn everything myself. But, that's a hell of a lot better than not relearning that, right? Than still thinking that same thing and going, oh, the government's against me. The companies are against me because that isn't the way the world kind of works today. Well, no, it's just you haven't adapted. You haven't changed. You haven't taken responsibility for your life and for your future. You absolutely have to do it. It's the number one most important skill that most retail market participants never actually learn. And that's what really it is like the beginning and the end of why they don't do well as traders. Because again, you can't, trading is all about what you're doing today and then reviewing it and figuring out what you can do better, which means necessarily you have to critique, you have to review yourself. A lot of people aren't comfortable with that. They don't like saying, oh, I made this mistake or that mistake, because then they wear it like a badge, like it defines them. Your mistakes don't define you. Whether or not you go and look and review and critique and find those mistakes and then actively work to change them, that's what defines you. Making the mistake itself does not. Mistakes are learning experiences if you allow them to be. Okay? Does that make sense? Let me see here. We kind of so Texan, love it. It is what it is, man. Trucks are what it is, right? Just not a lot of room. You feel big on the road, and if you're going to do something on the ranch or something, you've got the ability to do so. Not so easy to do like in a Porsche or something or a Ferrari, right? Yeah, see, Bamboo, just the knowledge that I can afford what I would like is enough for me. I don't fancy all that luxury stuff. For me, financial freedom, independence is the thing that makes me happy. Yeah. And Bamboo, for those of you that don't know, lives on the other side of the world. He's not here in the US. Right. So his view is going to be even more. I love his view even more because it is more attached to that. Listen, I'm just trying to create true freedom here. Because your government can't give, if your government can give you freedom, it's not, it's a privilege. It's not a right. And if you have enough wealth, you create your own privileges. You can protect your own rights. Really. That's what money does, right? That's what wealth does. It gives you the ability to have freedom of time and freedom of movement. That's the only real freedom in the world, because those two things constrain almost everybody. I'm stuck in this job, and I'd like to get this other job in this other city, but I can't afford to move over there to do it. Or I'd like to go and move to this other country, but I can't afford to do it, right? So money, wealth is a true freedom, right? It enables you, but it's not in and of itself. You don't create wealth just to have wealth. You do it for what wealth affords you. It affords you time. It affords you movement. Does that make sense? So, yeah. So, again, this is what we continue to look at here. Let's jump over here real quick to gold here. Tell you what I'm thinking on gold. So gold looks like it may be ABC and then ABC. So that would give us, again, what we call a double zigzag, which is a W, X, Y. And so within W and within X and within Y is three waves. ABC, ABC, ABC here. So we're looking for the breakout right now. Let me do this. Excuse me. We're looking for the breakout on this COMEX chart here. Oh, I'm sorry. This is silver, not gold. So we'll do gold in a minute. But we're looking for the breakout above 49.225 to give us our next potential move up, which is a pattern target of 58.77. Now, remember what I told you earlier about you come in, and even if I'm giving you these things, you're not going to understand really how to truly use it effectively. So I know if we're doing this is three waves, and it suggests that this is going to be corrective. Now, this could be the low, or it may not. We could see, as I was showing you earlier, the flat correction. Where's that stupid? It's right here, isn't it? There it is. So 3 down, followed by 3 up, followed by 1, 2, 3, 4, 5 down, and then you move up, right? This whole thing becomes corrective. This is a possibility of what could be going on here. Another possibility is you could see a triangle printing here. So a triangle goes 3 waves down for A, okay? So you go 3 down for A, 3 up for B, 3 down for C, 3 up for D, and then 3 down for E before it finishes up, right? And a symmetrical triangle is going to see lower highs and higher lows in that, A, B, C, D, E. But you can also have a running triangle, and a running triangle will give you a higher wave B here. So you'll have 3 waves down for A and then 3 waves up for B. And then you'll start seeing some consolidation. Up a little bit higher here, right? Something like that, right? So now you have A, B, C, D, E, and then you're going, okay? There are so many ways that corrections can play out. This is why people usually lose money in their corrections. They can make money on this. Most of y'all can guess somewhere in here and go long and be correct and make money on this rally. And then you end up losing it all and usually more here in the sideways. But if I tell you, listen, there's 3 waves down, that means this is corrective. And pattern target breaking out above wave X here locks that in as 3 waves, which is corrective. And that gives us a pattern target of 58.77, right? All you know is that basic information. You don't know this. You don't know this. You don't know that maybe this could just be a leading diagonal. This could be an ABC. So a WXY is wave 1. And you get a wave 2, and then you'll have 3 more waves down for wave 3. And you have a wave 4, which will overlap with wave 2. And you'll have 3 more waves down for wave 5. And then you get A, and then you get B, and then you'll have further down for C, right? But this is what I'm trying to tell you guys. When people are telling you on here, okay, well, price is going to do this, and this is what I'm looking to do. Well, the problem with that is you don't have any other context. You don't know enough beyond that for most of the times for you to be anywhere consistently profitable with that. Because there's so much else that could go on depending on the person who's looking at and what they're looking at. The other thing you don't know is most of y'all don't know proper risk management, right? So even if this is correct and this works out here, if it doesn't work out, if it doesn't break out above or breaks out above wave X, let's say it does a flat, right? 3 waves up and then 5 more waves back down here. You know, without proper risk management, and then you get scared, it comes down here, and then you get out, and then it takes off without you, right? That's the other issue that you have when you're blindly following people online, including me. Is you don't have context. And again, most of y'all don't have proper risk management. And this is all considering that the person that you're listening to actually knows what they're talking about. A lot of the times, the stuff you see out there is just nonsense. There's a guy out there who's got 140 somewhat thousand followers, and he just posted a chart for Bitcoin. And he says A, B, C, D, E, or E still in progress, right? But he's saying, listen, we've got an inverse megaphone pattern, inverse symmetrical triangle, right? And basically, so a triangle, symmetrical triangles, I showed you just a minute ago, you're going to have lower highs and higher lows. So it comes together, right? Well, this is a more rare pattern called the megaphone or the inverse symmetrical triangle because you have a low, a high, a lower low, a higher high, a lower low. And he says, okay, this is what's going on. And it's a wave 2. If you don't know anything about Elliott wave, that may seem like that makes sense. But I'm going to tell you right now, that's wrong. Because a wave 2 cannot be a triangle in Elliott wave theory. A wave 2 is always your final compression before your final leg of the direction you're going in. X wave, B wave, 4 wave. Wave 4, wave B, wave X, something like that. But again, it looks convincing because the pattern seems to fit. It's not a wave 2, though. And if it's not a wave 2, then that means his wave 3 target is shot based on that. Right? Because if he thinks it's that triangle, then it has to be a wave 4. And wave 4 is going nowhere near your wave 3 target. Would have been, where it would have been. But these things you don't know, right? When you come in and you're just blindly following what people are telling you online, you don't know these things. But these things make a big difference. Okay? What's up? What's up, Diego? Good to see you there. Bernardo says, I just want to be able to make income without relying on location. Again, freedom of movement, right? Freedom of movement, freedom of time. That's the whole thing, right? Let me see here. Did I see something else there? Yeah, okay. So yeah, it does. Is that Vasil? Vasil? Man, I hope I didn't just butcher your name, really. He says, the daily seems to be forming a broadening top since July of 2025. Yeah, what I'm showing, right? Is what you're talking about, right? Right over here. It would appear to be that way, right? And so we can be that. So what I would say is, if you think this is what's going on, minimally what you can do is a pattern target. You take the swing low to the swing high on your fib retracement tool. Make sure you have marked off your 1.618 and you use that as your target. So minimally, just based on this pattern target is 139,501 and a half on this chart. Right around that area. You don't have to know Elliott wave for that. You don't have to know anything about that. But if that's what you think is going on there, that's what you can look at. If it drops a little bit further here, let's say it goes A, B, C, D, and then E and comes out a little bit lower. I mean, again, you would just take that from that swing low to wherever it goes. That 1.618 becomes your target. But if you're in here and you're thinking, oh, it's got to go way up to 200,000 because this is a wave 2, you're incorrect if you think that this is a broadening pattern on a wave 2. What would be better to look at would be something like maybe a 1, 2, 3, 4, 5, and then 3 waves down, 3 waves up. And again, if we look at this, 1, 2, 3, 4, 5, that's a flat pattern. Get 3 waves down, 3 waves up, and then 5 waves back down that sweeps that low. That's what we call a flat. But now we just need some, again, some more follow through to the upside to confirm that, right? So that's what we're looking at. We're looking for a breakout above this swing high up here. Really kind of on this chart again, whatever your chart is, but on this chart, it's 116,400. Want to see some continuation through that now while this low holds. Just saw a guy who calls himself head global macro, but his S&P count has wave 3 to be the shortest. Yeah. See, again, if you understand Elliott wave, then you know when you have that your wave 3 can never be the shortest. That's an absolute rule. It cannot be broken. If you think it's a wave 3 and it's shorter than waves 1 and 5 in your count, then you're wrong. It's not a 5 count. Not like that. That is not a wave 3. Like Bamboo's saying here, people can call themselves what they like. It doesn't change that they don't understand the craft. And that's the important thing. This is what I'm hopefully getting across to y'all here, is there is a difference in actually knowing what you're doing and just being out there posting stuff. But if you, as the consumer, the person consuming that content, doesn't know what they're talking about, right? If you don't have that knowledge, then you might go, yeah, that is a broadening form, and it's a wave 2, and we're going way up there. Or you may look at that count that Bamboo's talking about here, where wave 3 is the short, so go, yeah, but it can't possibly be, because the rules state that it can't. So this is where we go back to what I was talking about at the beginning, which is, listen, folks, you're out here, hopefully you're trying to learn. You're not just trying to get people to give you targets, because again, as I showed you here, even if we give you targets without proper risk management, without understanding context and what could change and what not, without understanding when to get out if it doesn't quite reach a pattern target, right? Maybe it stops a little short. Maybe it continues a little longer. If you don't understand all that, it's easy to lose money even with somebody who does a correct setup. But that isn't on them. That's on you, right? Again, this goes back again to the other thing I was talking about, which is this, having to have, what do you call it? My brain just shut off. Having to have responsibility for the things that you're doing, for the things that you're involved in. But hopefully, again, I've shown you where we're at. It doesn't mean we can't go down further, but right now we're just sideways. Until we're taking out levels that I talked about, we're sideways. You should be neutral or bullish. If we take out those levels I talked about, then you can be bearish a bit. Okay. Other than that, hopefully, you've learned here that, in order to really learn how to trade, you have to be able to critique. You have to be able to say, yeah, I made this mistake, or I could have done this better. You have to be able to do that. The other thing is, whether you're following people, if you're following people online and listening to what they're saying, you have to understand that they may not actually know what they're talking about. If they're just posting Wyckoff schematics because it looks kind of like what the range looks like, and they're saying, oh, it's this one or that because of that, you know better, right? They have a 50-50 chance of being right. And it isn't because they did anything. It's just because price is either going to break up or it's going to break down. They did no Wyckoff analysis with it, right? So there's a lot out there that you have to learn depending on how you're looking at it. But you can't usually tell often without that knowledge first if somebody you're listening to actually is, knows what they're talking about or is actually giving you something actionable. Right? So hopefully that helps you guys out a bit, as you go forward. But absolutely, guys, you have to 100% be responsible for everything that you're involved in. You've made decisions that have you there, and you're potentially making decisions at that time. And so you have to be able to look back on that and go, okay, where did I make the wrong decisions? Or where could I have made better decisions? What do I know now that I didn't know then that would have made my decision different? And, if you can do that with trading, you've got a lot of potential for success. If you can't do that, if to you everything's manipulated, you're a victim. If those are the way you look at it, again, it doesn't, you're not going to get anywhere in trading. You're just going to keep throwing money into the market and you're going to keep blaming somebody else. But remember what I said earlier. Before I go here, just remember what I said earlier. Even if the market's manipulated, right? It's going to be manipulated at the areas at which the market's headed anyway. In almost all markets, people don't hold enough size to really do any real manipulation outside of manipulating where retail is weakest. Okay? So even if you do, who cares? What does it matter? It doesn't, because you can still trade it effectively. As I show day in and day out with our students over at TWC, right? So hopefully this has been a lot of a learning experience here for y'all. Again, I do things a little differently here than most people. Most people just want to give you news or just want to talk about everything's manipulated or just want to give you targets. And, as I've gone through here, those aren't really where you should be looking if you're serious about making money, as in the markets as a trader or investor. There's things you need to do for yourself. Okay, guys? Hey, LXT, good to see you, man. I'm just about out of here. But anyway, listen, guys, do me a favor. Join in. Get in there. Click the little QR code at the top of the screen here. That'll take you to our Trap and Trend webinar page. Get signed up for that. It's the only thing you need to know to trade consistently profitable. You can be trading that same day that you learn it and do it. You'll also get access to my my risk management framework. Again, how do you properly apply proper risk management? Not just with this, but with any way you're trading out there. Yeah, we're gonna have a lot of fun on that. You guys, your minds are gonna be blown. I'll show you how many times a day this shows up. Any time frame, any asset class, any direction, whether it's up, down, or sideways, this works in. It finds you the most likely profitable entry. And then proper risk management takes care of it. And if it ends up trending afterward, the trend part of the system teaches you how to follow that trend so that you can continue locking in profits as it moves. If not, you make 2R, you're good. The next one. All right. Happy Halloween, everybody. Y'all trade safe. Have a great day out there. Remember, Fibbo said he's going to be here next Friday. All right. So hopefully y'all will be in there for that. But as always, remember, the only thing you control is how much you lose. Please keep working on that risk management. Hit the thumbs up, hit the like, hit the subscribe, follow, share the link. And if you can't click on that QR code, just go to members.texaswestcapital.com and you'll see the Trap and Trend webinar link down at the very bottom of that page. I think it's all the way over to the left side. And jump it there, okay? All right, y'all take care. Have a great weekend. I'll see y'all later. Bye, everybody.
Trading tip: always manage risk before chasing gains.